Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Indian benchmark indices slip 1% this week as IT companies drag the markets lower on the back of weak earnings. The Nifty IT records its biggest weekly fall since December. 31 Nifty stocks post losses this week. Reliance Industries is also to report its Q4 numbers today. Analysts expect a decent March quarter overall. Jio may see modest growth. The retail segment is expected to put up a good performance. The Reserve Bank has permitted the merged HDFC entity to hike stake in HDFC Ergo and HDFC Life to 50% before the effective date. This will allow them to buy Aberdeen's 2% stake in HDFC Life. Legacy blue ticks disappear as Twitter begins its much-talked-about purge. Elon Musk puts out a cryptic tweet saying such a great day in so many ways as several celebrities, politicians, athletes lose their verification status. 74% of the Nifty 50 companies do not have active verification as of 4 p.m. today.
Subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
Bajaj Auto MD Rajiv Bajaj says subsidy masks reality and blunts innovation amidst reports that the government is not in favour of extending EV subsidies beyond March 2024. In an exclusive interview to CNBC-TV18, Bajaj says India cannot build a future with so many subsidies in any sector. Reveals the Triumph model that Bajaj is making will be unveiled on the 27th of June in London. Massive search operations underway to trace the terrorists who attacked an army vehicle in Jammu and Kashmir's Poonch. High alert has been sounded in the border districts. The NIA team has visited the site of the attack. Violence in Sudan continues despite the nation's rapid support forces agreeing to an Eid ceasefire. The country's army chief makes no mention of truce in a TV address. Prime Minister Modi chairs a high-level meeting to review the situation of Indians stuck in Sudan. Russia accidentally bombs its own city near Ukraine, leaving a 20-meter crater. Ukrainian President Zelensky urges NATO chief to fast-track Ukraine's NATO membership. NATO chief says this will be on the agenda at its summit in July. Mumbai's real estate sales hit a new peak this year, but the city's developers face a fresh challenge as the state regulator issues notices to 16,000 projects for failing to update key information like sales. Well, let's start with the day's market action. Indian markets closing with minor changes following a range-bound session. However, both the sensex and the nifty have lost 1% this week, weighed down by the weak performance of tech stocks that saw disappointing earnings. Surabhi standing by to wrap up the market action for us. Surabhi, well, it's a mixed bag for the day, but for the week, closing not on a particularly great wicket.
Well, we've come to the end of what has been a no-move week for the market. Well, no movement, at least as long as you're tracking the index. The Nifty trapped in a 300 to 350 point range. The good news for the bulls is at least the range did not break on the lower side. The lower side being just around this 17,550, 570 kind of a zone. However, having said that, nothing seems to be moving the screen. It's all about individual stocks, individual pieces of news or earnings. On Friday, we had a bit of a mini scare because the Monday low started sort of getting tested. We did reach it intraday, but then there was a recovery coming back as well. There's a lot of sector rotation that has been the hallmark of this week. So, for instance, on Friday, we saw some of the IT stocks come back. In IT, the index on a weekly basis has declined about 5% after the kind of halo we saw from Infosys and TCS's cautious stance. But then we heard mid-cap IT companies, both Mastech and Cyient, coming out with very good performance, sounding optimistic, and that gave a ray of hope to the street. And incrementally, we saw buying even in the large caps on Friday. For instance, TCS, Infosys, Wipro, HCL Tech after its numbers. It seems that the street has taken a view that this is not a sector sector-wide meltdown phenomena. It was perhaps more client and company-specific issues. So that is IT. There was some traction in consumer stocks, ITC, for instance, Britannia. But the thing is that none of these trends last consecutively for a couple of days or even a couple of weeks. It's one day up, one day down. That's the kind of market that we are in. Speaking of down, on the downside, you had a lot of selling in life insurance stocks because the mood seems to be that pop that had to come in March because of that 5 lakh, tax leeway, that is over and done, and now perhaps it'll be a little tough to grow the business. So all the main stocks, SBI Life, HDFC Life, ICICI Pru, all of them were down and out. So were banks. The bank Nifty had a rough day on Friday, losing about 0.5% in trade. ICICI Bank is approaching its numbers with a lot of caution. So that's a lot about the large caps. Let me quickly come to the mid caps. And here on Friday at the index level, there was underperformance right from the morning. The advanced decline ratio was negative, the red line being above the green line pretty much throughout the session, though there was a lot of individual stock action. For instance, a couple of shoe companies, Bata or a Mirza International, some names like Delivery. But again, it's very, very specific to individual stocks. What next? Well, the market continues to search for triggers, and it hopes that Reliance Industries numbers and ICICI Bank, either of these or perhaps both of these put together, will provide a more definitive move for the market.
All right, Surbhi, many thanks for joining us. That is how we closed for the week. But on to the oil markets, where crude prices remain under pressure as economic and interest uncertainty fuel worries of a recession that could dent oil demand. This comes despite the Eurozone's economic recovery and a strong demand recovery that's come in from China. In earnings, Reliance Industries is all set to report its Q4 numbers today. Analysts are expecting a decent quarter for March, but Jio may see modest growth. The retail segment is also expected to put up a good performance. Sonia and Mangalam join us now with the key expectations. Mangalam and Sonia, thanks very much for joining us. Take us through what the street is expecting from Reliance.
Well, it's a big day. Reliance Industries is all set to announce its Q4 earnings. Remember, the stock is down 7% in 2023 so far, but it's a decent quarter expected this time around. First, let me take you through all the key numbers that you can watch out for. On the revenue front, it's about an 8.5% growth that we're looking at compared to last quarter. While on the EBIT, the EBITDA could see a growth of around 5.2%. Margins could be a tad bit under pressure compared to what Reliance did last quarter. But on the profitability front, it's a 12% growth that we're looking at somewhere around 17,700 crores. Now, as I said, both the consumer as well as the commodity businesses for Reliance Industries have done decently well this time around. First, let's take a look at the oil to chemicals business, which is a key reason for the recovery this quarter. There's a sequential recovery that we're expecting for a couple of reasons. A stronger base gross refining margins and lower windfall tax is something that can aid this segment for them. In fact, looking at the gross refining margins, Singapore gross refining margins improved to $8.2 a barrel in Q4 compared to $6.3 a barrel last quarter. There's also a demand improvement seen because of the China reopening, and that has aided the numbers this time around. In the consumer-facing businesses, Reliance Jio has slowed down a tad bit, so we are seeing the revenue and the profitability growth moderate for them. In fact, it could be the lowest in the last 7 quarters. On the average revenue per user as well, it could be absolutely flat this time around at 178 rupees. A couple of reasons for the slowdown, but primary reason is that there's been an absence of a tariff hike, and that has caused Reliance to see a slowdown in its growth rate in the telecom business. Let's move to retail now. Retail growth is expected to be about 6% on a sequential basis, coming in at a little over 46,650 crores. These are the recommendations put out from Nomura. And on the EBIT side, we're expecting about 3,800 crores versus 3,600 crores last quarter on a sequential basis. So clearly, as you've seen, there's a decent growth expected. Some of the businesses like Rel Jio could see a bit of a slowdown, but it could be offset by good growth in the oil to chemical space.
Well, for Reliance's retail business, it's already been on a big growth path. So this time around, year-on-year growth as well as quarter-on-quarter growth is something that the street is working with. Remember, usually post the third quarter, there is a slump, but the company's store expansion will offset this post-festive season slump as well. And year-on-year, the numbers will look much better because of, one, the network expansion, and secondly, a strong favorable base for the company because of Omicron-related issues in the same time last year. So quarter-on-quarter, revenue is likely to grow by 4.5%. For the first time, it crosses that 70,000 crores per quarter mark. The EBITDA grows by 2%, just under that 5,000 crore mark, which means that the margins for the company meander around that 7% market sell. These are Nomura's expectations. Year on year, like I said, a 22% growth in the revenue looks much better, a 31.5% growth in their EBITDA as well. The company's foray into the FMCG business, Independence, the brand that they launched a couple of quarters ago, is something that we'll be watching out for. Apart from that, they've expanded their horizon as well, entered into the personal care and home care categories too. And more than anything else, they've recently launched the beauty care platform too. So these are some things that we'll be watching out for. The heat wave is on, so the acquisition and launch of Campa as well as Socio is something that the street will be watching out for, but that may be more of a first quarter phenomenon, and eventually Metro AG's India business coming into them is also going to help the retail business grow the growth path that it already is on.
Mangalam Sonia, many thanks for joining us. Now, the Reserve Bank has not given any exceptions to HDFC to comply with the mandatory liquidity requirement. However, the central bank has allowed the entity to raise its stake in the insurance subsidies to above 50%. Ritu joins us now with more. Ritu, what does this mean for HDFC?
Well, Shireen, there is relief on some fronts, but no exemptions granted on other fronts. It's really a mixed bag what's coming from RBI in terms of the relief that was sought for the merger of the $40 billion merger between HDFC and HDFC Bank. Firstly, on the priority sector lending requirement. Now, there, some leeway has been granted where RBI has said for the first year, you only consider 1/3 of your portfolio as on the effective date of merger for calculating the PSL. And then the remaining 2/3 of the portfolio of HDFC Limited can be considered over the next 2 years. So you can spread the requirement over the next 2 years. That is the first one. The other very important one where HDFC had sought an exemption was in meeting the liquidity reserve requirements. Now, there are two of these. First is the SLR, which is the percentage of deposits that banks invest in government bonds. Now, that is slightly lower when compared to banks. So HDFC Limited would have held a lower percentage of SLR compared to the bank. There's no exemption that has been granted on that front. As far as the cash reserve ratio is concerned, which banks do maintain, but housing finance companies don't really do it as per regulatory norms. Again, here no exemption has been granted. So on the effective date of merger, both the SLR and CRR requirements will have to be met by HDFC as a combined entity, keeping into account the large portfolio of HDFC Limited as well. The important relief that has come in is HDFC Limited's investments in its insurance subsidiaries, where RBI has permitted HDFC or HDFC Bank, because ultimately these subsidiaries are going to be housed under the merged entity. So RBI has permitted them to hold in their stake in excess of 50%. But there are two other subsidiaries. For instance, HDFC Limited holds stake in HDFC Credila and HDFC Education and Development Services, which operates in education, schools, etc. There it has said the shareholding will have to be brought down to 10% in the next 2 years. So again, some leeway granted for them to meet these requirements. There are certain other exemptions which are being granted when it comes to loan against shares, the interest rate benchmarking, because of the differential interest rates between the bank and HDFC Limited. And then lastly, in terms of income recognition, that is, how do you, what kind of provision do you set against bad loans, etc. That will have to be aligned. But again, let me reiterate, the merger was announced 1 year back. So there's been ample time for HDFC, while it was waiting for these reliefs from RBI to sort of balance its books. So it shouldn't come as a huge negative. We're also being given to understand from our sources within the banks that they're well placed as far as meeting these liquidity requirements also is concerned. So we'll hear more from them later in the con call, but it doesn't seem to be a big shocker at all.
All right, Ritu, many thanks for joining us. Now, amidst reports that the government is not in favour of extending the subsidy scheme for electric vehicle companies, Bajaj Auto's Managing Director Rajiv Bajaj says he is not a fan of subsidies. In an exclusive conversation with CNBC-TV18, Bajaj added that India cannot build the future in electric mobility with subsidies. Take a look.
I am not a fan of subsidies of any kind. And I do not think India is going to build a EV future based on subsidies. Subsidies going away, in my view, should not really have that big an impact in the long run, because the future of EVs in India will be built on the back of sound strategy, not subsidy. Subsidy is not a strategy, and in my view, subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
Well, shares of Vodafone Idea surging in trade after the telecom company's board reappointed Aditya Birla Group chairman Kumaramangalam Birla as an additional director. Birla had left the company less than 2 years ago. His reappointment comes after top executive Krishna Maheshwari quit as non-executive director due to personal reasons. Swiss bank Credit Suisse has filed a contempt plea in the Supreme Court against SpiceJet. The bank has alleged that the airline has failed to make its payment as per a court-approved settlement. Credit Suisse claimed that dues of $4.9 million are outstanding and have not been paid as per the terms of settlement agreement. The court has put Credit Suisse contempt plea on hold after SpiceJet assured the court that one tranche will be paid today and the subsequent tranche will be paid in May. Shares of Angel One slipped in trade today after the company received emails claiming unauthorized access to clients' data. However, the company has confirmed that their clients' securities, funds and credentials remain secure and that they have begun carrying out relevant action against the unauthorized access. UK-based food chain Pret A Manger has opened its first store in Mumbai today as part of its strategic partnership with Reliance Brands. The shop, which is a recreation of the franchisee's London store's location, also marks Reliance Brands' foray into the food industry. Pret will open a second shop in Mumbai in the next 15 days and a third in Gurugram Cyber Hub a month from now. Fintech unicorn Open has laid off 47 employees, joining the growing list of startups cutting jobs. In a statement, the Tiger Global-backed neobanking platform said employees were let go of on the basis of performance evaluation. The co-founders of Open have also taken a 50% pay cut. Elon Musk on Twitter has started the much-talked-about purge of verification tick marks for users who've not signed up for its Blue subscription service, which is a paid service. Now, this has led to several celebrities, athletes, politicians, industrialists and journalists across the board losing their verification status. The message from the Twitter boss is clear: pay up or lose the blue tick, which is often wanted as a badge of honor in the Twitterati universe. In his ever so cryptic way, Musk tweeted, and I quote, "Such a great day in so many ways." Archana Salanki joins us now with more. Archana, tell us more on the Twitter blue tick purge.
Thank you, Shireen, for that. Well, a quick look at the top Twitter handles. Elon Musk is, of course, at number one. Former US President Barack Obama has been allocated a grey tick as his page has been recognized as government or multilateral organization. Now, Justin Bieber, Rihanna, Ronaldo and Katy Perry feature in the list as well. Only Rihanna, it looks like, has paid for the subscription. The other icons have lost their verification status. Meanwhile, Elon Musk claims to have paid for the blue tick subscription of 3 people: William Shatner, basketball player LeBron James, and author Stephen King. All 3 of them had claimed that they would never pay for a subscription. Now, back home, many Twitter users also woke up to find that their blue ticks had disappeared. Prominent industrialists with a significant Twitter following have lost their blue ticks. They include Ratan Tata, Gautam Adani, Uday Kotak and Nandan Nilekani. However, there are corporate captains in the yes to blue tick camp as well. And these include the likes of Anand Mahindra, Sajjan Jindal, Harsh Mariwala, Harsh Goenka, Kiran Mazumdar-Shaw and Vijay Shekhar Sharma. That's not all. 74% of the Nifty 50 companies do not have active Twitter verification. There have also been complaints from users about how their blue tick has disappeared despite them paying for the subscription. Now, Hindi film superstar Amitabh Bachchan is one of them, and Shireen, Twitter is witnessing a meme fest there with the blue ticks gone overnight. Back to you.
Yes, it is a fest of all kinds, memes and much more. Amitabh Bachchan saying he paid, but he still hasn't been given his Twitter blue tick just yet. And there's no recourse. Who do you speak to? There's nobody here at Twitter India to start with. But Archana, many thanks for joining us with the latest on the blue tick purge. Meanwhile, chaos at Twitter blue tick comes as the company's CEO Elon Musk is facing hurdles with his other ventures. Tesla plunged in trade after reporting a major drop of over 20% its first quarter earnings. SpaceX also had its own share of problems with its Starship rocket exploding during its test flight after takeoff. Frank Holland is here with the details on the ongoing upheaval in Musk's ventures.
It has been a pretty rough 24 hours for Elon Musk and his empire of companies, kicking things off with Tesla. Those shares losing nearly 10% of their value yesterday. Its market cap opening below that of Meta Platforms for the first time in more than a year. Musk himself losing more than $10 billion worth of wealth in the process. Then there's the quote, I'm using air quotes, you can't see him though, successful failure of a SpaceX Starship rocket self-destructing about 3 minutes into its inaugural test flight. And then Twitter finally removing legacy blue check marks from non-paying user accounts, among those now going quote-unquote unverified. We're talking Beyonce, Pope Francis, Oprah Winfrey, and former President Donald Trump. However, Musk says there are a few exceptions, like William Shatner. He also let LeBron James keep a blue check. He said he'll actually pay for it himself. So on last night's Fast Money, Risk Reversal's Dan Nathan, he went full Avengers. He made the case that Elon Musk may be facing an endgame when it comes to his empire.
I think there's something else going on here with Tesla. We know that he had been selling Tesla shares all year last year to fund his purchase of Twitter. We know that SpaceX has been for sale. He's been looking to raise capital that way. You know, if this stock were to continue to go lower, if they are pushing out a manned trip to the moon, and that's what the whole idea of this rocket launch was today. Twitter, they just marked down from $44 billion to $20 billion. He's got $13 billion. This is not a generally very liquid person. He used to be able to get whatever lines that he wanted to, but now he's got all these banks on the hook for this debt that he can't service based on Twitter's businesses. So to me, he might be entering the end game here a little bit for being the CEO of all of these companies and being that levered.
Well, Musk and his misadventures. Time for us to head into a break. But up next, Mumbai's real estate sales hit a new peak this year, but the city's developers face a fresh challenge as the state regulator issues notices for failing to update key information. Details when we return. Mumbai's real estate sales have hit new highs and the inventory overhang in the city has shrunk to a 5-year low. But developers in the city face a new challenge. The Maharashtra real estate regulator, or Maharashtra, has issued 16,000 notices to developers for failing to update RERA-mandated project details. A lot of these are related to redevelopment projects in the city. Jude Sanith reports that developers say compliance lapses are due to a technical glitch and will be resolved soon. Take a look.
Mumbai's redevelopment is chugging along at a brisk pace. Of the 3,000 projects that were under development in November 2022, 60% or 1,800 of them were redevelopment projects. This number has only increased since then. This resurgent demand is good news for developers. What's not is that the state's real estate regulator is not happy with them. The start of the fiscal saw Maharashtra issue notices to 16,000 projects for failing to update key information like sales, fund utilization and completion in the interest of transparency. We learned that these notices were sent after show cause notices were first issued in January this year. Defaulting developers could now stand to be fined anywhere between 5 to 10% of their total project cost as per existing RERA laws. Industry body Credai MCHI says most of these lapses were due to a GST technicality in redevelopment, one many developers were unaware of.
Where the customers would want to invest.
Because it's a redevelopment, I have a reversal tax to be paid. So I have to still pay for the unsold inventory. Though normally had it been a private land where I owned it, I would not pay after OC because there is no services there. So like this, even in Mumbai where RERA is concerned, we have got the OCs, we didn't upload our Form 4. I think give us 45 days, that number from 60,000 will come to 1,000 or 3-digit number is what I look at.
These notices come at a time when Mumbai's real estate sales hit yet another high this year. According to Anurag data, the Mumbai Metropolitan Region, or MMR, saw 34,690 homes being sold between January and March, 182% higher than this period in 2018. This pushed inventory overhang down to just 21 months from the 2018 levels of 55 months. But builders blame a higher compliance burden on a slowdown in new registrations. Between January and June of 2022, 3,622 projects were registered with the regulator, but this dropped to 2,815 in the second half of the year. But the regulator says it will not let up the pressure.
Please ensure that you are keeping your compliances in place. Compliances is not another hurdle that the government creates for you. I am very, very clear that compliances have to be only on issues which are need to know basis. Compliances cannot be which you must just give it out just because you must give it out. But that helps you monitor your own project and helps the buyer also know what's happening. That reduces litigation and brings you to a point where you have a happy customer at the end.
TRADAI is pushing its members to meet the compliance requirements and believes these troubles will come down significantly once the technical issues are ironed out. In Mumbai, Jude Sanath.
Well, that is it on this edition of Business 360. Do stay tuned. We've got a lot more coming up right here on CNBC TV 18. Our Friday favorite, Editor's Roundtable, is up next.